Well, let's continue now. Build up to the President's address tonight. President Cyril Ramaphosa widely expected to announce some sort of lockdown level 1 or perhaps even beyond that. Annabel Bishop is the Chief Economist at Investec Bank. Annabel, good afternoon to you. Obviously, everyone's expecting some kind of a move down the lockdown regulations. In other words, a great opening of the economy. There really is a lot of work to do in the economy, isn't there?
Yes, no, certainly. And of course, there's going to be huge disappointment if we don't get an announcement tonight. Either obviously lifting a lot of the restrictions, level 2, of course, as you said, an outright move to level 1. And of course, obviously international travel needs to resume from a business point of view, but many other restrictions as well. Even, retail outlets at airports are still closed. And of course, this is problematic for employment in those areas as well. All the multiplier effects throughout the economy. We need to get, jobs back into the economy, certainly, but we particularly need to get economic activity higher.
So the lockdown maybe comes to an end, or we move to level 1, which is probably going to mean that there are very few restrictions. Maybe you have to wear a face mask. Obviously, we'll still do that. No mass gatherings. But then we need a lot more. We need big kind of intervention. What options are there to try and get the economy going again? And in the middle of this is the reform that's been stalled for years and years and years.
Well, I suppose the option is to actually put the reforms through, not have more plans. And I believe, the President's going to be announcing some more plans as well tonight for the economic stimulus. But I think, rather implement, bring in the 3G, bring in the spectrum, bring in the other low-hanging fruits that we can certainly implement quickly. And, of course, reduce all the excessive amount of red tape we have in the economy. Not plan to do it, not announce you're going to do it, but actually do it. We have a hugely onerous and very complex burden from a regulatory perspective on many industries in the economy. And of course, particularly in the industrial sector. And it's one of the reasons why we've seen deindustrialization, shrinking of the manufacturing sector. And of course, as well, the big issue that we've seen a lot of foundries and smelters go out of business. And that's your very heavy manufacturing sector. It's a loss of decent jobs and good wages.
There's talk of another stimulus package. Now, that normally takes money. We've seen huge stimulus packages in the United States and Europe. They have more money than we do. Do we have the money for some kind of stimulus?
So, I don't think that we necessarily have the money directly for just pushing in more from a stimulus perspective. I think what we're going to see is probably some careful reorganization of money, so perhaps more, and here, some of the reforms that are needed are going to be packaged as part of the stimulus to actually get the show on the road. We obviously have massive problems at Eskom electricity supply, and of course, there's probably going to be an announcement, greater detail on that. So I think, everything coming together, perhaps in a package. It's not necessarily fiscal, money being thrown at the problem, but perhaps, some big reforms as well. That's certainly what needs to happen. From implementation, we want announcements of when they're going to be implemented, not announcements of plans.
One of the problems is that even if there were to be reforms announced even tonight, I worry that people have become so cynical they just won't believe it.
Well, I suppose that's true because, you have announcements of reforms, but then they don't get implemented. They're pushed backwards and forwards. There's all sorts of political dogma. And then, of course, there's all sorts of political interest, people who politically connected, they want to be self-enriched from the process. There's huge, ramifications from a corruption perspective. All that massively delays the implementation of the actual reform itself. If obviously you're looking to go on a big infrastructure drive or something, but even, obviously cutting red tape, all of that, again, a lot of political obstruction. Of course, people opposing Ramaphosa inside the ANC, other political parties who perhaps aren't that keen to see him succeed, from a good economic growth perspective. So still a lot of vested interests.
So vested interests that we have. At the same time, we've got tonight's speech, and then probably next on the calendar is going to be the Finance Minister Tito Mbowene's medium-term budget policy statement. I mean, I would presume if we don't get announcements tonight on the economy, we'll get them in that speech.
Look, we could only hope, but again, the budget is not, of course, full pronouncements on the economy. It's merely, in terms of indicating how exactly your expenditure and, of course, revenue is coming, but of course, expenditure is going to be divided up, and of course, giving insight in terms of where we are from the debt levels. Sadly, the actual structural economic reforms themselves, need to come from certainly the departments, but of course, the presidency as well. But once again, it's the implementation everyone wants to see. I don't think people just ignore the announcements now of new reforms.
Annabel, I do want to talk a little bit about your field and economics specifically around the world, because it really is a conversation that's moved to the left. If I've understood it correctly, the Financial Times said in an editorial this week that any policy interventions would need to include some form of basic income grant, some sort of basic income really, and redistribution. I mean, this is a time when the subject of economics and the conversations have changed dramatically.
Well, of course, we're looking ahead now to the ending of this 350 Rand grant, the basic income grant, essentially, or the COVID grant is being called. And, of course, from a humanitarian perspective, obviously we'd like to see it extended and, of course, maintained, because we would like to continue to see people being able to scrape together something to be able to buy food at least. So it's a terrible situation. Of course, what really is, I think, quite important is to look at a social democracy. That's the type of economy that's being led in the UK, where you do provide a social net and social welfare to help those who are unable to help themselves. But at the same time, and this is where South Africa has failed, you need to obviously balance it very specifically with proper economic governance of the economy, of government finances, but of course, reforms as well that I mentioned, particularly removing regulation that is impeding the ability for economic growth. Because there's little point in, trying to provide the support many people need to help them through schooling and education, getting them into the economy, which is always the ultimate aim, if you're not really allowing the economy to provide jobs, by stifling the private sector, by quelling private sector ability to do business, because your regulations are so stifling. On the other hand, you also have a lot of productivity in the civil service, which actually prevents simple things like environmental impact assessments and other studies from being passed, air certificates, water certificates, all of these, being a big problem in South Africa. And again, really not being cleverly done. Often a lot of this legislation imported from other countries, particularly for South Africa in the manufacturing sector. You can see that a lot of it's inappropriate for small and medium enterprise. And of course, as you and I know, it is the small enterprises which, obviously have the potential to create the most jobs. So South Africa really needs to relook at its regulatory framework.
Annabel Bishop, really appreciate the time. Thank you, Chief Economist at the bank Investec.